The US has just recorded 6 months of strong economic growth, for many evidence that the worst recession since the Great Depression has long gone. And yet a potentially catastrophic problem is looming.
There are going to be a couple of very difficult decisions are going to have to be made to get through the end of the year, and one of them is the debt limit.
At $28.5 trillion, that debt is way more than the government's annual revenues. And that debt has grown at a record pace in the past 10 years or so. But the US has been able to live beyond its means, partly because the dollar is the world's #1 currency and investors everywhere want to buy and trade it. But the debt has ballooned even more during the pandemic because the US government has spent trillions of dollars keeping the economy afloat. And now the Biden administration wants to spend another trillion or so upgrading the country's infrastructure. The debt ceiling was capped at $22 trillion in 2019, but benefited from a 2-year extension that's due to expire on July the 31st, preventing the government from borrowing any more. Lawmakers can either raise the debt ceiling or extend the timetable again, but only if they overcome the objections of Republicans who think Democrats are reckless spenders. And Democrats claim Republican tax cuts caused the debt to surge. The US Treasury Department, which manages all this debt, is so worried about the deadlock, it's now barred local governments from taking on more debts to finance their day-to-day operations. It's true that this has happened many times over the past 20 years or so during political wrangles over the debt ceiling, but it's also one of the first steps down a path that could end with the US government shutting down because it's run out of money to function. And that's happened many times too. But the debt ceiling has never been so high, and a default on all of that money owed would be catastrophic for a global economy trying to manage a resurgent pandemic. Owen Fairclough, CGTN, Washington.